Hi everyone, I hope you're all doing well, and today we're going to take a look at one of the new stocks that are coming onto the stock market with a SPAC stock, and this is going to be Opendoor. So we're going to take a look at this company, we're going to have a look through what it is, what its financials are like, and if it's a good opportunity to go buy this company, because I've seen it being mentioned quite a few times on different things on the YouTube scene, and especially because ARK Invest have some sort of interest in it as well. That's also helped its case. So we're going to take a look at this company and I'll see if it's a buy. So as always guys, if you can smash the like button, if you are new around here, make sure you subscribe, and we'll get stuck into the video. So I think this company's really gained a lot of fame, especially on the YouTube scene because of it being a SPAC stock and they're kind of like the new hottest things right now. And especially because ARK Invest, Cathie Woods has been buying this company, and we know ARK Invest like buying disruptive companies, and this is a disruptive company. You know, when we get into it, you'll see why they are buying it. And yeah, they've been buying it quite heavy as well. So that's really helped the publicity side of it. And I think there was also a rumour going around that Warren Buffett was looking at buying it, or Berkshire Hathaway were, which also helps the hype a little bit. So I guess them two news stories have really helped it catch some of the headlines. But before we even get into what the company is and what the company does, we'll get stuck into the stock and what it actually is. So it is going to be a SPAC stock, so it's going to go through a merger with SPAC to come onto the stock market. And it got announced in about September time this was going to be happening with the SPAC stock. The ticker symbol is IPOB. And yeah, the time was about $10 when it got announced that it was going to be merging, and it went all the way up to $26. And since about the 14th of October, when it did reach them highs, the stock has been downtrending and is down about 26%. It has had a slight recovery around about the 2nd of November when it hit $15. It has bounced up to about $19 since then. But yeah, we can see that it's going to go through a SPAC stock and it's going to merge. And like I say, the ticker symbol is IPOB. Now, I always like looking at if there's any details on the merger, when it's going to happen. And all we've got is that it's going to happen in Q4. So it looks like it's got about 40 days to get this done. We'll see what exactly happens. But one thing I always say is, like, I do like knowing that the merger is definitely going to happen. So yeah, there's no confirmation that it's going to happen just yet, but it looks like it's going to be sometime in Q4. Now, when we look at Opendoor, they have a decent management team there. We've still got the founder as the CEO, which is always a positive sign that I like to see. So very experienced management team, and that have been with the company for a while. And basically what they're going to do is, if we go onto this slide here, we can see they're going to unlock home ownership for millions of Americans. Buy, sell and move at the tap of the button. So what Opendoor are going to do is something like a Zillow, where you're going to be able to sell your home through an app. Or what Opendoor are going to do is disrupt the classic way of selling and buying a house, where you go through solicitors, it takes a long time, where they are able to, you know, obviously you put it on the app, you put your details in, your house sells and Opendoor buy it, and then also Opendoor will go and then sell you. They're trying to disrupt this this space, you know. It's a space I've said for a long time on this channel. This is why so many products are getting hyped up, because this space is a space that just hasn't been disrupted for so long. And it needs it. You know, it's one of the last developing spaces that's got the last kind of like internet e-commerce boom, you know. And so this is a great space, I think, that will get disrupted over the next few years. And Opendoor, like I say, are trying to do that through this app. Easy, quick selling and buying of your house. And you can see here, this kind of gives a little bit of information on, like, you know, how the offer works and what it looks like. Also, you know, you put in your details, which helps get the value of it. And then how you get your price through. I've got to say, it does look very clean as well on the app side, which is really good. And here you can see the breakdown of like the prices and you know, the fees that are offered there, and you get a bit of a breakdown really of how the platform looks when you get your offer and everything like that. So that's really good from when we look at the platform side of it. And we get a breakdown of how the company's developed and how they've expanded this product of buying and selling through an app. So we look here. The first 6 months reached 2.7 billion in Q1 20. You can see they started off in 6 markets, in 6 states there, had a 3.2 market share. It's 2.7 billion revenue, which is pretty good. I mean, it is going to be a lot higher because obviously it's houses, so obviously it is a bigger value that you are selling. We can see here that today we are in 21 markets and just scratching the surface. So you can see here they have expanded to a lot more states. 21 markets, took 2% of the market share, 5.5 billion in revenue in Q1. And you can see here the plan of where they are looking to go eventually, and the big expansion path they are looking to go on. I am going to say they played it a little bit clever here, because you can see there's a lot of empty states, but they have covered it in blue just to look like they are dominating all these areas. But there's still a lot of states here that they're still not in, which I thought was a little clever marketing tactic. You've got to kind of look for these. I thought that was a little clever how they've coloured a lot of states in that they're looking to go into, but they're not actually there. I thought that was a little bit of a smart move, but I noticed that one just to make it look a lot bigger than what it was. And when we look at what the growth they have put in so far, it's been pretty good from Opendoor. You can see the home sales, 145% change. Massive growth on them homes sold. You look at revenue from 0.7 billion to 1.8 billion to 4.7 billion. And they had a pretty good Q1, 5 billion. So, you look at that, just one quarter, 5 billion. If it wasn't for COVID, and they could keep up 5 billion a quarter, you'd be talking nearly a 20 billion year, which is insane, absolutely insane growth. I think from the home sold revenue point of view, absolutely phenomenal growth there. And we have a look at the financing in place, committed to a non-resourced asset-backed facilities of 2.4 billion, and you can see here 560 million in cash, so we get a good idea of how the balance sheet is looking right now. The thing you've always got to remember is, obviously buying and selling a lot of these houses is going to be a lot of money coming in and out, and it's not cheap to buy a house, and as you scale up, you need more and more money to keep buying more and more houses. So that is always going to be one of the little problems you do with scaling a kind of company like this. And then we get a summary of the financials, and you can see the scale of homes sold going up. You can see 2020 is going to half because of the COVID dip, and then it's going to try and recover through 2021, and then 2022 we should see it beat 2019 numbers. I thought that was a little bit of a conservative forecast. I would hope in 2021 they would probably equal 2019. So I thought that was a little conservative from Opendoor's point of view. You look at revenue growth, growing at 100% rate, then a decline of 48%, and then it goes down to 40% growth 2021, and then it goes to 79% and 58%. So the growth is going to stop being what they're predicting, a triple-digit growth, and it's going to come back down to the double-digit. Still very impressive growth though. You can see here it's going to forecast the growth profit here. But the key thing is to look at how much money they're actually going to be making or losing. And even though we can see the growth profit is increasing, they're actually still going to be losing money. And you can see the money they're burning through is increasing. 2017, 57 million, 131 million, 218 million. And then this year it's going to be 141 million, and then 185, 123. And then 2023, they're apparently going to make 9 million. And it's going to make up a percentage of 0.1% of the revenue. Now, I've got to say, obviously the big problem I have is that the more they scale up, the more they buy houses, the more they do these houses up. The problem is that the more properties you're taking on, the more cash you need, the more money you're putting back into the company. So there's a point where it does break even, I think. But at the same time, as it keeps scaling up, it is going to carry on burning through this money. So I was quite shocked to see that it's going to go to 185 million, and then it's going to be able to knock 60 million off to 123 million loss. And then to go from 123 million loss down to a 9 million profit, I thought, I'm not sure on that forecast, and it's very fishy that it's 0.1% of the revenue. I think they've been putting this investor relations together and gone, look, we can't put an investor relations together where it looks like we're not going to make profit for the next 3 years, because people are going to say, oh, we're a company that's going to just, lose money for the next 3 years. Why would you buy shares in them? So I see this here of 123 million loss down to a 9 million profit. I think that's just way too much of a jump. I would expect them to be somewhere around about a 50 million loss. So I think this has been a little bit of a lie. I don't think that they can turn around that much losing around to profit that quick in 1 year. To go from that loss to that profit, I just can't see that. I just can't see it, especially with what you think about the company is and how they have to keep, buying more properties, put more money into the company, put more money into the houses. I just can't just see that turnaround yet. It's a very, very quick turnaround for me. So yeah, I do think that this forecast on the profit side might be a little fishy from my point of view. And then we get a breakdown of how the valuation is. I've got to say that I think the company, from my maths, is somewhere around about a 10-11 billion market cap right now. Let's just say, we won't take the COVID number, let's take 2019. 4.7 billion revenue for about 11 billion market cap, I think it is right now. So I mean, it's not crazy valuation. It's probably about fair valuation, I would say. So yeah, like I said, it's not too bad. It's not too bad of a valuation right now. So overall, what's my kind of opinion with Opendoor stock? Well, I do like this company. I think it's a great space to go into. I think they could be very successful in this area. My main problems I have with this company is that as this company scales up, it's going to keep burning through. It has to, put more cash in, and that means that profitability will take a very long time to come. And it, obviously on the investor relations, it said it will have it in 2023. Personally, I think that was just putting it in there to, make it sound better than what it is. I think realistically, and I think Opendoor know realistically, there's no chance they're making profit in 2023. I mean, if they do, well done. But I'm looking at them numbers and I think it's just, a case of we need to attract investors in. And with us attracting investors in, we need to put profitability somewhere in that investor relations page. And I think that's what they've done. So from my point of view, I like the company. I like where they're going into. The growth is absolutely fantastic. And I do think it has the potential to be a very successful company. The valuation side of it is not too bad either. I would not blame you for really buying at these sort of valuations. They're a pretty decent valuation. Overall, my kind of thoughts here is that I'm just a little bit nervous on that profit front and how quick they can get to profitability. I think it could be longer than 3 years. That's my big problem. And for me, one of my rules as an investor is not to buy companies that are going to carry on being unprofitable for another 2 years. It's why I didn't buy Neo. Fantastic company, but unfortunately it's going to burn through the cash. And it's same with Opendoor. If they're going to be burning through 100 million cash every year, and it's got some cash on the balance sheet and it needs to expand, it's got the combination of wanting to grow and having that cash on the balance sheet and also burning through it, which is not a great combination. That's why if I'm buying a lot of these companies, I like them to be very close to profitability and are going to be profitable very soon. A company like this is going to be hurting the balance sheet, and then what do we see from there? Are they going to look at taking more debt on? Are shareholders going to get diluted? So from my point of view, I do like it. It's going to go on my watch list. If you were to buy it, I would not blame you because it is not a bad valuation and it has a very disruptive company with a lot of growth. Personally, for me, it's not a buy right now. It's a company that I'll keep on my watch list, and potentially over the next 12 months, I'll see how it comes out of the COVID situation. I'll judge the sales growth. I'll see if its profitability is moving in the right direction. And I think in 12 months' time, this could potentially be a buy for me, but not right now at the stage it's at because of the profitability side, which is kind of gutting because everything else with this company does seem quite strong. So yeah, it's one for my watch list. I'm not going to buy, but potentially, you never know. A few months down the line, it could be. So it's definitely one I'll keep track of, and don't be too surprised if it gets featured on the channel a little bit in the future. So I hope you enjoyed that video on Opendoor. As always, if you can smash the like button, if you are new, subscribe, and I'll see you in the next video.